In today's video, I'm going to be discussing a new note that was just released suggesting the Federal Reserve is going to cut interest rates by 200 basis points starting in just a couple months and extending through the middle portion of next year. I have all the details and exactly what that means for all of us right here in the video, as well as the economy as a whole. Let's get into it and discuss what's going on. First off, thank you so much for liking and sharing this video with those buttons down below. I really do appreciate it. Also, if you're new here or if you haven't done so yet, please make sure to subscribe to the channel as well with the big subscribe button down below the video. I really appreciate it. Thank you so much. Let's get into it and talk about the Federal Reserve, interest rates, and a cut of 200 basis points. Wait, what? That sounds pretty nice right now, right? Yeah, that'd be very, very helpful for a lot of people. It'd be very helpful for the economy. It'd be helpful for businesses. It would be helpful for everybody under the sun right now in this country who is basically struggling because of the very high interest rates because of the Federal Reserve over the last couple years here. Now, as of right now, the Federal Reserve has been holding steady with an interest rate between 5.25 or 5.25 and 5.5% is where they've been sitting. However, a new note was just released suggesting the Federal Reserve is likely going to be coming in starting in September of this year, which, by the way, they have their FOMC meeting in the middle portion of September this year, and the note is suggesting they're going to cut for the first time then and over the next 8 meetings, basically that meeting plus the next 7 meetings after that, extending all the way into July of 2025. They're going to be cutting interest rates by 25 basis points per meeting for the next 8 meetings, resulting in a 200 basis point rate cut. Now, that'd be awesome. Now, that would bring the rate from the Federal Reserve down to 3.25 or 3.25 and between 3.5% versus the 5.25 and 5.5 that we're currently sitting at right now and have been for a very long time because they continue to pause and hold rates where they are, right? Now, here's the thing. If you've been watching the videos here on the channel for a while now, or if you've been doing any research on this, it's not that hard to figure out. These interest rates are crippling the people and the economy, businesses, everything. It is not a good situation. These high interest rates have been very, very difficult for a lot of people. I mean, look at anything right now. If you're floating a balance on a credit card, you're paying very high interest rates, probably somewhere between 22, 26 plus percent. It's very high right now across the board on credit cards. If you're trying to get a mortgage, well, you're going to be paying about 7% interest across the board on a 30-year fixed rate mortgage. It's about 7%. It oscillates a little above and below, but it's around there. If you're trying to get a line of credit, a personal loan, an auto loan, I don't care what it is, you're paying higher interest rates today on everything than what we were paying just a couple years ago, and it's rough, right? Now, here's the thing. That's what we're experiencing as consumers, but guess what? Businesses, small, medium, and large, are all experiencing the exact same thing, and I've been saying this for a long time now. These high interest rates are not sustainable for a very long period of time. They can keep interest rates high for a while, but the longer that they keep them high, the more strain it's going to put on us, the consumers, and the economy as a whole, businesses. Everybody's going to struggle, and we're really seeing that right now. So anyway, this note that has come out is suggesting September. They're calling on September, mid-September, when the next when their FOMC meeting is, that's likely going to be the time when they implement their first rate cut, okay? Now, here's the thing as well. A lot of people associate a rate cut out of the Federal Reserve as positive for the economy. I'm going to say this much. That's not totally true, okay? A lot of people have this connotation that, oh, cutting by the Fed is going to boost the economy and that's going to be really good. It means that the economy is healthy again. Actually, no, that's not what it means. It means that the economy is softening. The Federal Reserve believes that it's actually not as strong as it was. The economy has softened up, and they're going to start cutting interest rates because if they cut too late, well, then it's really bad for the economy, right? But typically the Federal Reserve acts too late. Usually a lot of the times they're way behind the curve when it comes to raising rates and bringing rates back down by slashing, okay? So my point is, when they come in and start cutting interest rates, don't look at that as like, oh my, we've avoided a recession and we're good to go. No, actually I would think more the opposite, which is the Federal Reserve sees something. They see that the economy has softened, they see that the economy has weakened, and they want to start cutting rates before it's too late, and they're going to start doing that. Now, here's the thing. Cutting rates by 25 basis points is really nothing. I'm just saying this much. It's not that much, okay? 25 basis points or 0.25% is very minimal. I mean, that's like the smallest move that they ever make, right? Think of when they were raising interest rates. they raised interest rates multiple times, half a percentage point or 50 basis points, and even multiple times. I believe there were three consecutive raises that were 75 basis points. It could have been 3 or 4. I believe it was 3 that were consecutive 75 basis point rate hikes, or 0.75% rate hikes that they had during this hiking cycle. Okay, my point is they can certainly cut a lot faster than this. So even if they do come in with 25 basis point rate cuts, that's fine, that's nice, but it's also not showing a lot of aggression with the Federal Reserve as well, saying, oh, we see something really bad coming, we need to cut rates aggressively. Now, here's the other thing. On the other hand here, okay, I want to point this out. If we do see the Federal Reserve come in and say, well, we're just going to try, and we're going to cut rates by 50 basis points this time, okay, or 75 basis points or something. If they cut more than 25 basis points, that's basically a very, very clear signal that they see something softening in the economy way more than they anticipated, and they see something even more severe or bigger coming into the economy, and they need to get ahead of it faster, okay? So if you see bigger rate cuts than 25 basis points, just use it as a signal to think, okay, they see way more softening, way more weakness in the economy than what they're leading us to believe, and therefore that's why they're cutting more to get ahead of it. Does that kind of make sense? Now, generally, a rate cut also a lot of times after a hiking cycle and pausing like they've been doing and then cutting rates like they are possibly going to be doing here as early as September, according to this note here. But if this were to be the case, okay, so if they were to come in and if they do actually start cutting and things like this, generally this is also the start of when the market starts to go down, as in the stock market, things like this. This is generally when we start to see a pretty sizable pullback in the market as well, okay? So by the way, this is not investment advice. This is not financial advice. This is not advice in any way, shape, or form. I'm just simply saying, a lot of people also say, oh, when they cut, the market's going to go crazy. You're right. The market's going to go crazy down, right? So that's not such a bad thing, though. Maybe you've heard me say that before in other videos. A pullback in the economy, a crash and burn of the economy and of the stock market is not a bad thing. In fact, we kind of want that to happen. It gives a great buying opportunity. It gives a great opportunity to enter in lower, and it gives a nice little reprieve on buying pressure and allows us to start over and maybe kind of bring this market back up again. Okay, it's not a bad thing whatsoever. So anyway, I want to bring this to your attention really quickly. Of course, we don't know yet, but when we roll around to that FOMC meeting in the middle of September, obviously I'll bring that to your attention right away. But when we get that information, or if they happen to cut sooner, right, they could easily come out at any point. They don't need to cut interest rates at their FOMC meetings. They could come out in the middle of August. They have no FOMC meetings in August. They could come out in the middle of August and say, hey, sorry, emergency meeting, we're going to cut rates by 50 basis points right now. Whoa, if they did that, it would be shocking. I don't anticipate them doing that unless we see some massive, massive changes in the economy between now and then. Again, I don't see that happening. Not massively to the point where they need to do that as an emergency call, but that can be done as well, right? So anyway, just want to bring this to your attention really quickly. I hope this helps you. As always, please subscribe down below, like the video, share the video, leave your comments, questions, feedback, again, all of which are down below. Check out the other videos here on the channel, the thousands in the video library. The ones I've hand-selected for you down below in the description or the top of the comment section. And right now, pop on up your screen as well. You'll see some videos there. Thank you. Really appreciate it. Enjoy your day. Take care. Thanks so much for watching. And hope this helps you a little bit to understand what's going on here. And I'll catch you again later.